Welcome back. Futures pointing to lower opening for the broader averages. Take a look. All eyes are watching Treasuries this morning. Trading reopened following last week's sell-off. And the 10-year yield is currently nudging higher once again, above 3.25% right now. This is a new 7-year high this morning. And that is really what is unnerving stock markets this morning. Joining us right now is the Vice President and Head of Research at Global X Funds, Jay Jacobs. Jay, good to see you. Thanks so much for joining us. What are you seeing in terms of sentiment out there, investors today, given this new worry about higher rates?
Yeah, well, the 10-year Treasury is the most important number in the entire financial markets right now because it's how bonds are priced, it's how currencies are being priced, and it's now falling into kind of how equities are being priced. So everybody's looking at the 10-year and doesn't really care about anything else right now.
Have they changed their behavior in terms of, wanting in on stocks? I mean, you got weaker stock prices as a result of this for a couple of days straight now.
Yeah, I mean, it's very simple math around stocks. If interest rates and inflation are higher, stocks have are going to be discounted more. So there's nothing surprising. It's just the speed of the 10-year Treasury changes have really affected how people are valuing stocks today.
And Dagan, we've been talking about growth. The IMF is lowering its forecast for global growth this year and next. For the global story, they're talking about trade tensions and instability, but they also lowered the estimates for growth in the U.S. for next year.
Right, looking into next year, and that is the equation, is that how much will the higher interest rates also slow down growth in this country? But right now, going into earnings season, and I know we're excited to talk to Lindsay about this, but earnings are expected to grow still north of 20%, 22% as of last week, that we've got an earnings backdrop that could push through these concerns about the higher interest rates. And we'll be looking at guidance, of course.
What do you think, exactly. I think that when we look at the going into earnings season, the numbers have actually come down a little bit this quarter, which is different than what we've seen the last 2 quarters. But the question is, how are stocks going to react? And usually the market in the last 8 quarters or so, the reaction to earnings hasn't been that substantial in the month following, unless there was a substantial move before. In the last week, we've seen, since interest rates were pushed higher by the Fed, we've seen the market come down 1%. What are you expecting to see the market reaction with regards to earnings? They're good. I think the quarter's going to be good, but it's going to be all about guidance. And the guys that have reported so far are talking about input costs going up, whether it's logistics and transportations or even the dollar impact.
Yeah, that's exactly what we're seeing as well. I mean, this year has been so turbocharged with earnings because you've seen a good economic backdrop and the tax cuts have just, 25% earnings growth is ridiculous, right? That's not a sustainable number. That's not normal.
But it's been happening last couple of quarters.
It has been happening. It's really kind of a 2018 story. 2019 is going to be very different. People are expecting earnings growth to be more kind of high single digits. You can have a pullback in the markets and still have good earnings growth if it just falls short of expectations. So that's why people are so worried about guidance right now.
Which one of your funds are doing best right now? Where are you seeing the most activity?
So we're seeing a lot of activity in disruptive technologies where people are less focused on kind of where we are in the business cycle and more focused on which technologies are really starting to emerge. So one is fintech, where digital payments is just really taking over. I like to talk about, just how many ways can you pay for a cup of coffee at Starbucks? You can pay for it with a gift card, credit card, cash, so many different ways, and that's really kind of the digital payments ecosystem.
What's the number one thing you'd like to see the government do to keep the economy rolling?
I would like to see more spending on infrastructure. I think this is one of the highest return on investments that the government can do and something that's been massively underinvested in for years and simply could be a huge stimulus for the entire economy.
Well, it is booming. It was on the front page of the Wall Street Journal yesterday, that very story, that investment in infrastructure is booming. Firms have raised more than $68 billion in the first 3 quarters of this year, up 18% over the same period. And these are private equity firms. So, again, this is something that's happening without major government involvement or without, say, higher gasoline taxes.
And in terms of a policy, it probably is a policy where the two sides can come together post the midterm elections. Perhaps that is the next policy that we see coming out.
I think that's right, Maria. I think this could be a place where Republicans and Democrats work together. But I also think you're going to see more pullback on regulations. The president's not going to stop that. I think that has a bigger impact than taxes.
Yeah, I mean, the one that Jamie Dimon brings up all the time, it takes 13 years to build a bridge because you've got to go through so much red tape. Trade tensions, obviously one of the issues here. Secretary of State Mike Pompeo exchanged some testy words with China's foreign minister in Beijing yesterday. Comes as the Journal is reporting that some Chinese exporters are finding new ways to duck American tariffs. Is this a worry in terms of markets from your standpoint?
Yeah, absolutely. I mean, 40% of S&P revenue comes from overseas. So how we trade with any country, whether it's China or the European continent, is going to have a huge impact on domestic earnings. And I think any time you have more tariffs, it's going to introduce more uncertainty, and that really affects how companies behave.
So far, the president's strategy on these tariffs has been very positive. Look at the deal with Canada. Now he's working with the Europeans and Japan as well, Matt.
Yeah, there's no question. He wants to reset the terms of trade globally. And he obviously, the number one target is to really change the way we do business with China. It frightens investors at times, but if we don't get this right, we're not going to have jobs in America. So it's a pretty serious challenge.
But if the markets really were worried about the president's strategy on this, we would see a much bigger decline than what we're seeing in terms of back and filling. It feels like the markets are expecting that he will have success. I'm not sure about China. The U.S.-China tensions probably will go on some time.
And a national security threat as well as an economic threat. That's the difference.
Yeah, it sure is. Jay, great to have you on the program.
Thank you.
Thank you so much. Jay Jacobs joining us there from Global X Funds.